Good day, everyone. My name is Jeremy C. Magnano, and today I will be discussing the topic of corporation returns. Okay, so corporation taxation is a vital part of a country's financial and legal system. So in the Philippines, corporations are required to comply with the National Internal Revenue Code of 1997, which governs how businesses report income, compute taxes, and fulfill their obligations to the government. So through this discussion, I will explain the rules and procedures for filing corporate income tax returns, including quarterly filings, the final adjustment return, and special cases such as returns filed by receivers or trustees. So importance of tax returns. So corporate tax returns are essential because they ensure that businesses properly declare their income and pay the correct amount of taxes. These include quarterly and annual filings, proper computation of taxable income, and maintaining accurate financial records. So this process it promotes transparency, accountability, and fairness in the business environment. So corporation returns. So corporation income tax returns are formal reports required by law. It shows a corporation's income, expenses, deductions, and tax liability. So these are governed by the National Internal Revenue Code or NIRC as amended by the Train Law RA 10963. So we have types of returns filed. So all taxable corporations except certain foreign corporations must file their quarterly income tax returns and final or annual adjustment return. So the purpose of that is to monitor tax compliance and also to compute accurate final tax liability. So legal framework. So these are several legal foundations. So first is National Internal Revenue Code or NIRC, which establishes the obligations to file returns and defines taxable income. Second is self-assessment system, where corporations compute and declare their own taxes, while the BIR verifies compliance through audits. So third is Train Law RA 10963, which simplified procedures and standardized tax rates. Lastly is BIR regulations, which provide detailed guidelines and require electronic filing through systems like EFPS and EBIR forms. So these are the format of corporate income tax return. So mo ni imuhang ipasa para makasubmit ka sa imuhang tax return sa corporation. So the maximum is 4 pages. It focuses only on essential financial data. It ensures standardized reporting across corporations. So the key components of the corporate income tax return. So the corporate income tax return includes the corporate profile. This is the basic company information. Gross income, this is the total earnings excluding income already taxed, and then allowable deductions, expenses like salaries, rent, utilities, and depreciation. From this format, so we compute the taxable income. So taxable income equals gross income minus allowable deductions. So this computation determines the corporation's actual taxable earnings, and it is the basis for computing income tax due. the income tax rule is calculated based on applicable tax rates. So the income tax due is based on applicable corporate tax rate, and applied to taxable income results in final tax payable to the government. So the taxable years of corporations. The taxable year is a 12-month period used by corporations. So a corporations may choose its taxable year, whether um whether calendar year or fiscal year. It is used to compute the income, the expenses, and the tax liability. And again, it serves as the basis for filing income tax return. Okay, so it's again for the legal basis governed by the National Internal Revenue Code or NIRC, specifically Section 43, which is rule on the taxable year or accounting period of taxpayers, including corporations. Section 47 governs the change of accounting period of a taxpayer and provides rules on accounting periods and tax reporting requirements. So, daramo na siya kung gayong ganina na types of taxable year na mag-choose ang isa ka corporations kung kanus-an nila ihatag ang ilang tax returns. So, first is calendar year. Tria is January 1 to December 31. So, it is most commonly used in the Philippines. And it aligns with government reporting period. And the second year is the fiscal year. So, kani siya is any 12-month period. Ends on the last day of any month except December. So, for example, magsugod ang taxable year is April 1. So, dapat 12-month gihapon siya. So, ma-end siya in March 31. So, April, May, June, July, August, September, October, November, December, January, February, March. So, 12 months siya. So, the change of taxable year. So, a corporation cannot change its accounting period freely. However, changing the accounting period requires prior approval from the Commissioner of Internal Revenue or CIR. And this rule is based on Section 47 of the NIRC. So, declaration of quarterly corporate income tax. So, corporations must file tax returns every quarter. Instead of awaiting until year-end, income is computed cumulatively, meaning current income is added to the previous quarters. So expenses are also accumulated and previous tax payments are deducted. So again, it is based on the National Internal Revenue Code and NIRC of 1997 as amended. It governs corporate income taxation, quarterly filing requirements, and payment deadlines. So key principles. So quarterly income tax returns must be filed in duplicate. So income is computed on cumulative basis. And expenses are also accumulated per period, and previous tax payments are credited against current liability. So, what is cumulative basis? So, again, it is add income from current and previous quarters, and you deduct total allowable expenses for the same period and ensures accurate year-to-date computations. So, quarterly filing rule. So, corporations file income tax returns every quarter of the taxable year. So, payment deadline is within 60 days after each of the first 3 quarters, and the fourth quarter is for final adjustment and reconciliation. So, mo na siya ang tax computation formula. So, taxable income cumulative. So, gross income minus allowable deductions. And then, for computation sa quarterly tax due is taxable income times multiplied by tax rate. And then, net tax payable is quarterly tax due minus previous tax payments. So, final adjustment return of RFAR or FAR. So the final adjustment return is the annual income tax returns of corporations, and it is filed at the end of taxable year, so calendar or fiscal. It consolidates all financial data for the entire year. It determines the final tax liability of the corporation. So if there is a difference between total payments and actual tax due, the corporation may pay the remaining balance or they carry over excess credits and claim a refund or tax credit certificate. For the purpose of final adjustment return, it serves as the final reconciliation of taxes paid, compares quarterly tax payments, which is estimated, and actual annual tax bill, and it ensures correct tax is fully paid. So, legal basis. So, again, governed gihapon siya sa National Internal Revenue Code of 1997 as amended, wherein Section 27, Income Tax on Domestic Corporations, Section 75, Requirement to file FAR, Section 76, Rules on Excess Tax Payments and Options. So, options for tax difference. So, if payments are not equal to actual tax due, corporations may. So, giingon na ako ni kaganina. So, if na tax difference, para sa katong tax case na mo sa group 1 katong Ayala Corporations na naka-excess sila, so nag-claim sila o refund sa BIR. So, if payments are not equal to actual tax due, corporations may pay the balance if wala bayad and carry over excess credits to the next taxable year. So, ang katong sobra is i-carry na lang pagka next taxable year. Para katong pagka next taxable year is dituan na lang paon ang na-excess. Or mag-apply sila for refund or tax credit certificate, which is mo ang gibuhat sa Ayala Corporation. So, the carryover rule. So, syempre, may rule po ang carryover based on my research based sa National Internal Revenue Code that excess tax credits may be carried over to future tax liabilities applied against income tax due in succeeding taxable years, and it reduces future tax payments. So, a revocability rule. So, once na gipili nimo ang carry over, so mo na siya, final na siya, dili na dapat nimo siya usabon. Cannot be changed, the refund, or mag-apply ka og TCC. Applies for that taxable period. Kana nga period na imong gipili para i-carry over nimo ang imong sobra ng excess. So, purpose of irrevocability. So, prevents double claims. Like, ang mag-refund ka plus carry over. So, double claims naman siya. Nag-refund pa ka tapos carry over nimo. So, dili na siya pwede under National Internal Revenue Code. So, it ensures proper tax administration, promotes finality and certainty in tax decisions. Next is the extension of time to file returns in Section 53. So, the law allows extensions in meritorious cases, such as natural disasters, system failures, and serious illness. So, Again, extensions may be granted in special cases and provided under Section 53 of the National Internal Revenue Code NIRC as amended. The legal basis, Section 53, again, allows the Commissioner of Internal Revenue or CIR to grant extensions of filing returns. And it applies only in meritorious cases, valid dapat and justifiable reasons nga nung kailangan nimong extension para maka-file ka og returns. And Section 56 NIRC governs tax payment rules. Payment obligations may still apply even if filing is extended. So, even if ang imong filing of returns is extended, ang imong payment obligations is not extended. Dili na siya pwede ma-extend imong filing obligation. So, if ang date nga magbayad ka is kanang adlaw, mao na gyud na siya. Dili na siya pwede extend unless if mag-file ka og returns, ma-extend pa na siya. Pero ang magbayad dili siya ma-extend, ang mag-file lang pwede ma-extend. So, key concepts and principles. So, meritorious cases. So, muna siya, extensions are granted only when there are valid and justifiable reasons such as natural disasters, system failure, serious illness of responsible officers, and other uncontrollable circumstances. So, for example, a corporation's office is damaged by a typhoon. So, records are inaccessible and employees cannot work. So, the corporation may request an extension to file its return. So, extensions is dili siya automatic. Kailangan gihapon siya og approval from the Commissioner of Internal Revenue. And again, only the filing deadline may be extended. Dili not the payment obligation nimo sa pag-file og tax returns. So, late payments may still incur penalties. Nagyapon siya penalties if makalate ka o payment. Discretionary power of the CIR extension is not automatic. It is a privilege, not a right. So approval depends on the evaluation of the CIR. So each request is assessed individually. Muna siya kung giingon ka ganina. So third is distinction between filing and payment. Again, filing deadline may be extended and payment deadline generally not extended. So late payment may result in surcharge, interest, and penalties. Siya kung ginaingon, kaganina. And I believe this is my last discussion, which is the returns of receivers, trustees in bankruptcy or assignees, Section 54. So it applies when a corporation is under receivership, bankruptcy, assignment for creditor. So these persons manage the corporation's asset, tax, and operations. Tax obligations remain in effect even during financial distress. So even if a corporation is under financial distress, its tax obligations is mag-continue gihapon siya. So in such cases, the responsibility is ihatag siya sa receivers, sa trustees, or assignees. And again, it is based on legal basis. Section 54 NIRC requires receivers, trustees, or assignees to file tax returns, requires payment of income taxes on behalf of the corporations. So related provisions niya is sections 27 and 75 NIRC, and corporate income tax rules still apply. So key principles. So muna siya, tax obligation does not stop even if the corporation is insolvent, under court control, or under liquidation or bankruptcy. So the corporations remains a taxable entity. So muna siya ang key persons involved, which is first, receiver, trustee in bankruptcy, and assignee. So what is receiver? And receiver is it manages assets under court order. The under court order, meaning they are an appointed manager of corporate assets during disputes or insolvency. Second is trustee and bankruptcy. It handles assets for creditors and it ensures payment to creditors. The third is assignee. It manages assets for debt settlement. So it takes control of assets for creditor benefit and often involuntary assignment cases. So muna siya ang mga tao na na need asa na kanang muna siya ang mga tao na need hatag gihapon sa tax return sa corporations if ang corporation is in financial distress. The duties of receiver, trustee, and assignee. So they must file income tax returns for the corporations, report income earned during management, and pay corresponding taxes and comply with PIR requirements. So muna siya ang mga duties sa receiver, trustee, and assignee sa corporation if ang corporation is again in financial distress or na-bankrupt ang corporations because corporation is still obligated to pay their taxes even if ang ilang corporation is wala na nagkadimaon. For example, so a corporation becomes bankrupt and a trustee is appointed. So the trustee is isel niya ang company assets so and nabaligya to. So what if ang katong company assets is worth 500,000 so naka-earn og 500,000. So ang kailangan buhaton sa trustee appointed man siya so ang kailangan niya buhaton is i-report niya ang 500,000 as income and then second is mag-file siya og income tax return and i-pay niya ang tax due sa isa ka corporation. Okay, so that is my last part, and now we are in conclusion. So in summary, corporation returns are required legal reports that ensure corporations properly declare income, compute taxes, and comply with the National Internal Revenue Code. The system includes quarterly filings in a final adjustment return to reconcile annual tax liabilities. It also provides rules on taxable years, filing extensions in meritorious cases, and continued tax obligations even during receivership or bankruptcy. So overall, these regulations promote accurate reporting, fairness in taxation, and consistent government revenue collection. So that ends my discussion for today. So thank you for listening, everyone.